Everyone, this is Rob Roy, and welcome to the Elliott Wave Options S&P 500 U.S. market update. For the last 2.5+ years, we've been posting these videos, educating people how to become more successful traders using Elliott Wave, making money for our subscribers, and having a little fun in the process. However, the markets are nearing a pretty major inflection point, and the outcome may not be so humorous. Let's take a look. If you're new to the channel, be sure to subscribe to get all the market updates before the next trading session opens. For our timestamp, it is 7:50 p.m. Eastern Time on Sunday evening, and at this moment the futures are up 6.5 points, so fairly flat. A long time between now and when the market opens tomorrow, however. In the last recording, I mentioned that we did an outlook, an Elliott Wave outlook for 2020 back in January, pre-COVID and everything, where there were 3 separate Elliott Wave patterns that pointed to the price level of 346, in addition to this current zigzag that we're in, that you've seen multiple times, that has a price target of 347, and coincidentally or not coincidentally, all the patterns are coming in roughly at the same time frame too, which is fascinating considering the movement to the downside that we've had. The market right now is having a little bit of an issue with the previous highs. I don't think that's too much to be surprised about. And a couple things that I wanted to show you. Looking at the DMI, you can see that there's slight caution here. Nothing too significant yet. The ADX is still moving up nicely, but we're starting to get a little bit of weakening from the buying pressure. And if that positive directional indicator drops below the ADX, from a DMI standpoint, that's a point where you want to be on guard as far as more potential upside or lack thereof, if you will. And I also wanted to show you volume. And this is pretty significant too. From the time we started on this last run, right here at the 300 level, so this movement here exactly coincides with where the market has dropped off dramatically volume-wise. So not a whole lot of volume coming in. There's not new money coming in. The Federal Reserve has cut back considerably on their injection of liquidity. You can go to the Fed's website and see all that. I'm going to talk about that more in a moment, but we are approaching, and it will break above those highs. It's hard to imagine we're going to get here and not do that. Maybe we need to pull back a little bit first or not and come up, but all the headlines are going to be everywhere media-wise of the market moving to the new highs. Looking at the VIX, we have this triangle, and the VIX hasn't broken out convincingly from that triangle, has it? Nor has it closed this gap right here. Now, maybe it does that, but the longer that it takes hanging around this point of a potential breakout, the longer you have to give, or the more you have to give, I should say, the potential for some sort of a blast back to the upside. Not seeing that yet, but you have to just keep that in the back of your mind. Still feel like we'll break out of this, close that gap. That gives us the ammunition from volatility standpoint to go up and make those new highs. Whether or not we move up to the 168.1% extension, I think is a little in doubt now. Before I thought that was a very viable possibility, but with this current DMI, if that doesn't change and the positive directional indicator re-engage, that becomes less of a probability of occurring. Also wanted to show you, we've talked about this, and here's where the dollar is. And going back to July 23rd, here's where the dollar was. We've shown you this in past recordings. If you haven't watched them, go back and watch it. You can see where the wave 4 correction was. We came out of this triangle, Elliott wave all over the place here. Dollar broke to the downside, then had the correction, moved down. There was the wave 5 target. Here's the zigzag coming out of the corrective triangle. Again, just classic Elliott wave stuff. And we move down, and look where we've bottomed out, right at the absolute bottom of this Elliott wave predictive box here, and the 161.8% fib extension on the zigzag. So we have the wave 5 and the fib extension all hit in the exact same spot, and the dollar has been unable to break below that. In fact, it bounced a little bit above that, and that's where we are now. So one of the things that I want to share with you is silver. In the previous recordings, we talked about how we had both gold and silver long for our subscribers. We already closed those positions out. Didn't want to chase this move because it was just too vertical. If you've heard any recordings that I've made, you know I don't like the vertical moves. I much prefer when the market or the security we're trading is more in a 45-degree angle, because you don't get these violent corrections when you're moving up in a 45-degree angle. But now look what's occurring in silver. Now we're starting to build another triangle here. So that's pretty interesting. So that could give another potential entry here, and we may very well send that out to our subscribers here towards the beginning of the week. But look at gold. Gold hasn't enjoyed that formation of a triangle, at least not yet. It's backed off, but we had this doji up here. Same scenario though. How do you chase this vertical move? This is the exact reason why we haven't been in gold or silver since we closed our profitable positions out for our subscribers on the move to the upside. So what I want to know is, what are your thoughts? Where do you think we're going? What do you think is going to happen to the dollar? Are we going to bounce? This is kind of what I was looking for or hoping for. It looked like maybe I wasn't going to get it over here on the 5th and 6th of August. It looked like maybe we're going to break down and extend all the way on down to this 261.8% extension. If that would have happened, then silver and gold would have both continued rocketing higher and would have totally missed the entry. But now we're getting the consolidation from those moves that I was looking for, a bit of a corrective move to give a better entry for a new position. So again, my question to you is, where do you think the US dollar goes from here? Do we bounce and move back up? I think there's a potential level here, as I've mentioned previously, of a bounce up to here, at least to the 100% level, or do we crash down and come down and hit this new low? I think it's easy to make that case with all the Fed liquidity, but is that really what's going to happen? And where do you think gold and silver are going to go, which will be commensurate with what your opinion is on the US dollar? So I like this interaction back and forth. I've given you my opinions. What are yours? Hope you're doing well. Talk to you soon. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.